Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And typically joining me would be Mr. Michael Becker, but he is on another due diligence assignment. So the professor has been gracious enough to join us. So Mr. James Zhang. James, how are you?
Good. Thanks for having me, Paul.
So I want to talk a little bit about some of the things that are going on in the Old Capital world these days. James, how are things going with Old Capital?
Great. I mean, I think fourth quarter, we wrapped up 2020, pretty strong compared to Q2 and Q3. So that was positive. And we're seeing a lot of deals come out now here in Dallas-Fort Worth in terms of listings. So the activity is definitely picking back up. And I would say, a lot of people have been reaching out to us, and we just had our speaker series for January, and we had probably 200-300 people on that. And we'll start doing that on a monthly basis in 2021. And so if you missed that one, definitely go on to the YouTube channel and you can see the recordings there for the last one.
I definitely like the speaker series because we go in a little bit more in depth and detail for about an hour or two. This one that we did here in January, not too long ago, was really called the secondary and tertiary markets. And because anybody today doesn't have to live in Silicon Valley, they don't have to live up in New York City, they can live any place they want. Sometimes they want to live in some of these smaller markets, and they want to be renters in smaller markets. And so our discussion with this group of several brokers that sell multifamily properties in some smaller markets, I think was very positive about what's going on, kind of the general theme of where the puck is going, as Gretzky would say, in multifamily. Not everything is in the central business district, not everything's in the suburbs, but maybe it's out 50 miles or 75 miles or 150 miles from large areas. So I think it was very powerful. And then we'll have another one in February on a different topic. So also, too, if you think that we bring value to the conversation, please go back and leave us a 5-star rating on iTunes. We do appreciate that. We're trying to get 1,000 likes in iTunes for this quarter. We certainly would appreciate it if you did that also. And then don't forget, go to Old Capital Podcast and download our 17-page white paper report that Michael Becker and James Zhang and myself wrote. It gives you kind of a better details about how we see financing these days and how we see how you can structure these transactions. Because as the lender, we bring in 70, 75, 80% of the money to the table. So we are your biggest partner. And so know how to deal with us and react to us. And so I think that white paper report does a good job. So in the podcast today, we have a friend of ours that we've known for a long period of time that has done a great job in getting the message out to other people. When I say get the message out, he is building a team, and he's been doing it for a long period of time, of apartment investors. And so he has been successful about building an educational mentoring platform. And we think that it's a great thing to take a look at. If you're looking to invest in apartments, whether to be as an investor or a general partner, you definitely want to talk with our friend, Brad Sumrock. So Brad, thanks for being on the Old Capital Podcast again. We certainly do appreciate your time.
Hey, Paul and James, I'm happy to be here and talk about apartments in 2021.
So, Brad, what I thought we'd do today is, since you've been on the podcast 3 or 4 times at least in the last couple of years, I really wanted to hone in sort of number one about your program, where it sits today, sort of size and different programs you offer in that bucket, and then really go into what you're seeing from your students' perspective. You've got a lot of students underwriting deals across the nation. So get a little bit of a flavor on underwriting and market conditions. And then I want to deep dive into what you're doing with your portfolio, because I think there's a lot of mentors out there. I think you closed 2 deals in December or even in January. So we'll touch on those deals. So maybe to kick it off, tell us about why mentoring is important for multifamily investors. Let's start there at a high level.
Well, I think mentoring is important for anything you want to achieve in life. I mean, having a mentor is just a simple way to take shortcuts, make less mistakes, collapse timeframes, go bigger, faster, leverage somebody else's competencies and network and knowledge and resources and connections. So it's no different in multifamily. And, my life has been dramatically impacted by having mentors. I still have mentors. I pay a lot of money for my mentors. And, there seems to be a myth that somebody should mentor you for free. And look, that's not impossible, but that happens organically. And you don't know how many people message me and stuff like that and want to take me to lunch and want me to take me under their wing. And what's challenging is I can't do that with everybody. So that's why we have a formalized program. And so the reason I mentor people is because mentors have had a huge impact in my life. They still do. And I'll never forget when back in 2005, when I was able to walk away from my job of 17 years in corporate America, working for 5 different companies, and I was able to replace my job income with my investment income in just a few years. And so if I could give that gift to as many people as possible, that's why I do mentoring. And it's, they talk about finding your mission in life and finding your purpose in life. And this is what my life is all about.
So in your program, you really have, I guess, 2 different distinct sort of tracks. One is sort of people starting out maybe on the limited partnership side, on the foundation side, and then you have your personal mentoring group. Maybe talk about the size of your current program and then sort of how that is different than what you're seeing out there in the market.
Yeah, so I believe that, we have thousands, and we started our company in 2013, and we've literally had thousands, probably tens of thousands of people that have come to our various training events, weekend apartment investor training events that we call Rat Race to Retirement. And we've had easily over 1,000 people that have been in our various programs. And as you mentioned, we have one track that is more for the passive investor that wants to be educated, that wants to be able to make informed decisions, that wants to understand the nature of the investment, that wants to be considered sophisticated in multifamily. So we have a program for that, and many people start at that program. And we have another program for people that really want to be syndicators, or also commonly referred to as general partners or co-general partners. And a lot of people come right into that program. And so, really what my vision was and is to assemble a ecosystem of mentors, of clients that we refer to as students, of partners and providers, and assemble everything that one would need to be a successful apartment investor. So over the years, we've have had thousands of people that have come into our programs. And like, for example, in 2019, which was our best year ever in terms of how many deals we're purchasing and how many people were investing in deals and the impact we're making across America. In 2019, I think we did like 62 apartment buildings, over 10,000 units, and almost 800 million in asset purchases. And that was 2019. 2020, we were on track to do that again up until March. And then, as you know, really for 3 months, things came to almost a screeching halt because there was so much uncertainty. It wasn't just the shutdown. It was the uncertainty about what's going to happen. Sellers didn't want to sell. Buyers didn't want to buy. There were rumors of rent strikes and all that type of stuff. But we really started seeing a pickup in Q3. And then Q4, we finished 2020 just as strong as Q1. So for 2020, we probably did about 60% of what we did in 2019. And every indication right now that I have from my program, from my own activity, from my mentors, is that 2021 we're on track to have a full recovery. And we expect to see similar results in 2021 as we did in 2019.
When your students came back sort of post-COVID after sort of Q2 and Q3 were a little bit lighter, was there anything that you guys changed in your underwriting, anything that changed in your students' mindset? Because I think in the last financial crisis, one of the bigger issues was raising equity, getting people comfortable with putting money back into these deals. And so obviously to buy $500 million worth of deals, you're raising hundreds of millions of dollars of equity. So talk about sort of maybe your students' underwriting and then the mindset of your limited partners in these in your foundations program.
Well, let me just say a lot changed, okay, and continues to change. And one of the themes that I have right now, personally, in my life, in my business, in my investing, in my mentoring, is the need to continue to be dynamic and to pivot. Pivot is a big term right now. It's a big buzzword in business, right? And so there's a lot that changed. And for example, when the pandemic first hit, I started doing weekly webinars with my students to give them every week what's going on with financing, what's going on with collections. Is it true that nobody's paying the rent? How are we doing? How are the national firms doing? What's going on with NMHC and what are they reporting nationally? And so what we found after a few weeks is that people were still paying the rent. People were still prioritizing their rent payment. So in the beginning, we were like, okay, let's stop. Let's do stress testing. Let's assume 20 or 30 or 40% of the residents are paying rent. How much working capital do we have? When we're underwriting deals, we were underwriting higher vacancy, higher delinquencies, higher everything. And none of the deals were penciling out. And I think, that was probably a trend nationally. I mean, there were a lot of other groups that also do mentoring for apartments and real estate, and they stopped completely. And some of them are still stopped, by the way. And that's the thing. They haven't pivoted. They haven't adjusted to what's actually happening. So in the beginning, we became ultra tight and ultra conservative. But after a few short months, and then we started sending in offers with like COVID contingencies and all kind of stuff, But very few of those offers got accepted because as a seller, you're looking at your deal, right? And I own a bunch of deals, right? I'm looking at my numbers and maybe we're down like 1%, 2%. So like, why am I going to sell for a 10, 20, 30% discount? I'm not. Okay. So there was a big disconnect between the fear and uncertainty that the buyer community had and how conservative our underwriting became due to all of that fear and uncertainty and the actual numbers that we were seeing on the ownership side. And over time, as that gap started to narrow, what we found is that pricing actually increased for 2020. The average price per door increased nationally. The cap rate decreased nationally. There's more capital coming into apartments now because office got decimated, hotels got decimated, retail got decimated. There's more capital looking for yield, and they're coming into multifamily, but not everywhere in multifamily. They're coming into the markets that are growing, and that's a big deal. Is you got to know which markets to be looking at.
Can I just jump in here, James? If you are in multifamily as an owner or a limited partner, and you've done it for a while, Brad's name. If you're brand new and you're just looking to put your big toe in the bathtub to kind of figure out that this is something that you want to get into, I think you definitely need a mentoring group. Somebody that's done it for 10,000 hours plus, as I would call them, an expert. And I think there's a lot of white noise out there with a lot of mentoring groups that say they're mentoring groups, or that they say they're educational groups or things like that. And they're just really marketing companies that some of the people don't buy, or they don't put significant money into these deals. They just may be like a co-GP in name only. They don't put a lot of their cash in. And then if you asked them, if you got down into the details, they wouldn't really know how apartments operate or work. Brad, can you just, besides being a Carnegie Mellon graduate engineer and having an MBA from University of Houston, and really just thinking as an engineer mentality, tell me a little bit about it. You said you retired a long time ago, but your passion is educating people in buying apartment buildings. Tell me a little bit more about, your passion these days.
Well, and thanks, Paul. What I found as a mentor is it all starts with the deals that I'm doing. Okay. When I bought my first few deals and I was able to retire in 3 years, how would I have been able to do that if I hadn't bought anything? And then, my first time I started mentoring people was because I had bought deals and I had retired after 3 years. And so that qualified me to, now that I became financially independent from my apartments, that made me qualified to now mentor other people. So, I don't pay too much attention to what some of the other groups are doing, but yeah, I wonder like how many units they have and what their cash flow is. So I could just, I don't want to talk negative about any of that, but let me just talk about like what I've done and continue to do. So like in 2020, I syndicated a 200 unit deal in the Tampa, Florida area. So I syndicate. I also bought my own deal with my own money, 152 units in Fort Worth, closed in December. That was a $13 million deal. You could do the math. I put 30% down, got a 70% loan, and it's my own deal. So, I mean, that's $4 some million down. So like, I'm not here to brag, but I mean, we have money, we make money, and we invest money into apartments. And as a result of that, our cash flow is over 7 figures from our investments. We pay little to no taxes because we actually own real estate. In order to get depreciation, you have to have ownership, not just carried interest and waterfalls and stuff like that on the back end. So we make 7 figures from our investments. We pay little to no taxes. And we've done that for years and years and years. And so because of that, I feel that's been my focus, is doing deals and then helping other people do what it is that I do. And you touched on a good point. And it's funny because I wish I would have written a book and started the podcast. And I actually just did my first episode of my new podcast yesterday. So we're starting after 8 years, the Brad Sumrock Apartment Investor Mastery Show. And it's something that's needed right now. Okay. But yeah, I didn't focus on marketing and building up a list and all that type of stuff. And maybe I should have, but I didn't. So my focus is continuing to be doing deals and helping other people do deals and supporting them, whatever it takes in order to get them, whatever it takes legally and ethically and honestly, and with, to get people into their deals. And so there's a reason that people like your partner, Michael Becker, sought me out years ago, and we GP'd 5 deals together. We did over 120 million or 130 million in assets, 5 properties. We still have 2 of them that we're co-general partners in. And recently I was a GP with a company that has over 15,000 units, and we closed $120 million A-class deal. And I never used to do A-class. But again, when I talked about pivoting, we got to be opportunistic. And if you look at what happened in 2020, the A-class, by the way, the delinquencies are the lowest amongst all the property classes. So the A-class people are paying their rent at a higher percentage than the B's and C's. But the A-class was hit with especially in certain markets like Houston. So, the rents and the pricing between the A and the B class has really narrowed. So like if you're looking for where the opportunities is right now, you find a recessed market and maybe do A class. And I'm not giving anyone specific advice because it all comes down to the deal. So people ask me now, Brad, are you only doing A class? And I'm like, no, I'm doing B's and C's, but I'm also looking at A classes in markets where there's opportunity where we could come in and buy them for, seriously, if you want the 60, 70, 80 cent on the dollar deal right now, that's where the opportunity is. So being able to pivot, being in the market, not just teaching people, but actually doing deals and consulting with your students. And I mean, I have a whole brokerage team. I have a team of 9 coaches. I look at these deals and we're buying in 20, 30 different markets all over the country. So I feel like I have a pretty good finger on what's going on.
James, let me just jump in here too, is that I think mentoring or the value of mentoring gets a bad rap. If you're going to become a surgeon, you're going to go to college, go to medical school, do an internship, do your residency. You're being mentored. If you're going to fly a 747 or a DC-10 or that, you don't start off at the top. You start off flying 172s and you get associated with a certified flight instructor that teaches you the basics of flight. For those two careers, you have to pay money for specific education. And I think mentoring in the multifamily space gets a little bit of a bad rap because people don't see the value. Now, within Brad's program, it's specific multifamily education. So you're kind of on the cutting edge about what's going on with the industry itself. Some people they're like a stone over a still pond. They touch on little things, but Brad and his team goes in great depth about what's going on. If people were to attend, then again, let's talk about the newbies. What if they were to attend a Sumrock presentation? What are maybe one or two bullet points that folks take away from being in a live audience, or even today being in a virtual audience with you? What are they walking away with? Just their first take.
Well, there's so many things, and it depends on where they're at in their investment journey. I mean, for the new people, the content, it's like, how do you find deals, and how do you cash flow on deals, and how does the NOI work, and how do you pay no taxes or reduce taxes, and how does depreciation work? So the content is critical. You understand those things, especially as you're new. Now, I'm always learning content, okay? But now my content that I'm learning from my mentors is like expansion, looking at being opportunistic, looking at, what works today in today's market that didn't work yesterday. If we keep doing today what we were doing yesterday, we're not going to be effective. So that's one of the things that I get from my mentors. And the other one is the network. So, people say, oh, if you find a deal, the money is going to come. Well, if you find a deal, the money is going to come, assuming that you have a database of investors that are educated, that are committed, that want to invest their money, and not just friends and family that you work with or you hang out with that say, hey, man, if you find a good deal, let me know and I'll put money in it. And then you send them the PPM and they have their financial advisor review it, and they say, oh, well, this doesn't meet my criteria, or they don't even understand half the terms in your offering. So it's critical to have the network of investors. It's critical to have content. It's critical to have peers that you surround yourself with that are doing what it is that you want to do. And so, what we've created at the Sumrock program, and I say that third party because it's not just me, it's my team, and that's kind of our brand is my name. Sumrock is what we've created is everywhere from the content to take somebody that's never done this before to get them into their first, second, and third deal. The network so that when they find deals, they could have ease of raising capital. The partners like you guys to help with the debt or the legal or the title or the management. And then, for people that want to go to the next level, we have a mastermind program, and this is for people that generally have 300 to 400 units that want to get to 3,000 to 4,000 units. So depending on where you're at, we have everything that, and just as an example, I listened to the same Tony Robbins events, 5 times, and people were like, well, what do you get out of that? Well, every time I get out of it, I get out of it something different depending on where I'm at in my mindset and my expansion and my skill set. And so we got to be continually growing and improving. And maybe I heard something last time around that I wasn't ready for or that I couldn't implement, or I wrote it down and said, man, that's cool, but I can't do that right now because I'm at my capacity. And then you come back and then you hear it again and it's like, oh shit, I remember hearing that. Now I have the capacity or the ability or the mindset or the threshold to take that on. So, that's why, I pay a lot of money for mentoring. Me and my wife pay a lot of money to go and have proximity to Tony Robbins, Grant Cardone. And what we're going for now is not how to do apartments, but we're going as to how do we think like this expansive mindset where, especially in the middle of the pandemic, where we're pivoting and we're looking for opportunities and we're thinking about growing and not staying the status quo or contracting.
Oh, well, Brad, maybe to wrap up, maybe as you look at 2021, maybe tell us about some of the events that you have coming up, and then also sort of what your forecasts, what your goals are for 2021. And we'll wrap it up there.
Well, that's a lot. So like I'll just say my investing goals is I want to buy enough real estate so that I don't pay any taxes. And so what I do is I look at how much income we're going to make from all of our companies and say, okay, I need to have enough ownership to offset those taxes. So I'm already looking for my next deal. I want to GP a couple deals because GPing is a way to get leveraged income. You don't get a lot of depreciation and tax benefits, but GPing is when you put up a little bit of the money, but you take a carried interest. And so you have leveraged income. So I want to be a GP in a deal. I love to invest passively because it allows me to diversify because I can't look at every deal. And so I do all three. I'm going to buy my own deals. I'm going to be GP and I'm going to be a passive investor. And I have specific targets around those. We're growing our company. We're doing something really, really exciting. We've never done this before. And obviously, we'll be doing our weekend apartment investor training event in March. But prior to that, we're doing something totally free, and it's called an Invest in Apartment Challenge. And you guys are going to be a part of it. And so the Invest in Apartment Challenge it's designed for anyone out there, whether you've never done this before. It's free, so it doesn't cost you anything. So even if you have no job, no money, no credit, you could tune in and see what it takes to be a successful apartment investor. I'm not saying that's my avatar, but it's for anybody that's even curious, or it's for people that have 1,000, 2,000 units that want to go bigger, faster, and just scale up and level up. And so what it is every day for an hour, I'm going to be teaching different things, different content. And I have some of the best educators out there, like Robert Kiyosaki is going to be teaching one day. I'm going to interview him and I'm going to talk about what he's looking at in 2021 and what he's not looking at and why he loves doing multifamily real estate. Kenny McElroy is going to be on. Your friend and my friend and partner, Mike Becker, is going to be on. You guys are going to be on. So it's going to be kind of like this free crash course of the benefits of apartment investing, what the experts are doing, and how you could get into the game in 2021 and why you should make 2021 your year to be an apartment investor. So that's happening February 1st.
Yeah, and I think what's unique about that, and I like the format you guys have rolled out. So what's the best way for people to sign up for that in the challenge for next week?
Yeah, so I'll give you guys a QR code that you could. I'll send you guys a flyer and a QR code so you could put that on your show and on your website and in your emails.
Okay, that's perfect. And then, yeah, I like the format of, I think you're doing it in a Facebook group so you can see the other participants and be a part of it and get on live. So I like that.
Yeah, the Facebook group is buzzing already. Like people were saying, hey, here's where I'm from and here's my goals, or I've done this, or I haven't done anything yet and I want to learn. And there's so much already, like we haven't even started yet. And there's just a lot of buzz happening.
So Brad, maybe one last takeaway for our audience on 2021. What is your advice for them as they move forward?
Well, 2020, my theme was reaping the harvest. And little did we know how that was going to go. But I would say that 2020 was a great year. I know you didn't ask me about 2020, but 2020 was a great year to be in the business. And 2021 it's a interesting year because people were concerned about politics. People were concerned about eviction moratoriums. And those are some wild cards. But 2021, I'm telling you, if you're in the right location, if you're in an area where jobs are being created, where people are moving to, and you surround yourself with the right team, 2021 is a great year to be investing in apartments. And I'm not just saying that, I'm doubling down on it. So my personal strategy and the people that I consider my mentors, we believe that 2020 is the year that the economy fully recovers. We believe that there is hundreds of billions of dollars pouring into this country, pouring into multifamily, and a lot of that is dry powder sitting on the sidelines. And so if you're a nimble, independent owner like we are, that you're not an institution, you're not a REIT, now is actually the time. And that goes all the way up to like the A-class deal we did in Houston. I mean, this deal would have never been even available to us. This was owned by JP Morgan. This is the type of thing that Goldman Sachs would buy. And I'm not teaching like newbies to go out there and look for $100 million deals. But the point is that there are some great opportunities right now. And when you just look at, these markets like DFW, Phoenix, Tampa. And I'm not saying you can't lose, but it's hard to lose. It's going to be hard to lose in these markets if you have all the other fundamentals, if you know how to analyze the deals and you get the right debt, and you have the right management company. As a lot of people don't like the guy, but there's a lot of wisdom to what Grant Cardone says. We don't wait to buy real estate. We buy real estate and wait. In these markets, these are going to be great markets. I mean, you guys know the deal I bought in 2018, Berkshire Square, for $11.7 million. I just did a quick analysis on it right now. It's easily worth $18, $19 million. And this was 2 years ago when I was told I was buying at the top of the market. So that's just an example of what is possible and what I think is going to continue to happen in 2021 if you're buying quality assets in good markets. So that's how I'll wrap up, is buy quality assets in good markets and don't wait, and get in right now, and I could help you.
Sounds like a plan. Brad, what is the best way for people to get in contact with your group to get involved in the ecosystem that's called the Brad Sumrock team?
Yeah, so the best way is if you just go to my website, bradsumrock.com. There's no C. Depending on the timing of when you're listening to this broadcast, you could get into the 5-day challenge, February 1st through 5th. Also, our weekend apartment investor training event, March 19th through 21st. For those that are like, hey, I'm ready, I want to talk to one of your team members about one of your mentoring programs, there's buttons on our website where you could book a call with one of our leadership team members and get going right away. So that's all available on bradsumrock.com.
That sounds good. James, any final thoughts before we say goodbye to Brad?
No, Brad, I appreciate the time this morning. And, we've done hundreds of deals with your students, thousands of units. And so you guys are definitely always prepared, always ability to go out and raise the equity and get deals done. So we appreciate you mentoring people, bringing people into the multifamily world. And so thank you for coming on today.
You're welcome. Thank you, guys. It was a pleasure.
Thanks, Brad. Again, I'm Paul Peebles. That's James Zeng. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.